Exercise 2.7. The following information relates to Gloria Traders. Required. 2.7.1. Open the ledger accounts on the 1st of April 2025 with the given balances or totals. 2.7.2. Post the column totals from the given subsidiary journals to the open accounts and close of the accounts properly on 30 April 2025, except that the petty cash impressed amount was restored on 30 April. Information. Number 1, balances and totals on the 1st of April 2025. You'll have your opening balances for inventory, debtors control, bank, petty cash, creditors control, sales, cost of sales, and debtors allowances. Then your column totals in your subsidiary journals. Your cash receipts journal has your bank, debtors control, sales, and cost of sales. Bank, creditors control, and inventory. Debtors journal, sales, cost of sales. Debtors allowances journal has your debtors allowances and cost of sales amounts. Creditors journal has your creditors control and inventory amounts. Creditors allowances journal has your creditors control and inventory amounts. And your petty cash journal has your petty cash, creditors control, debtors control, and inventory amounts. You will calculate the 2 question marks. Sales, you'll use your cost price formula to calculate your sales, and your cost of sales formula, you'll first have to work out your markup percentage, and once you've got that, you can use your cost price to determine your sales. Remember, your markup percentage is sales less debtors allowances to get your net sales. Then you subtract your cost of sales. When you've got that answer, you're going to divide that by cost of sales times 100 to give you your markup. Once you've calculated it, you're going to get an answer of 20%, but I will show you on the next page how that calculation is done. And once you've got your markup percentage, you know cost price is sales times 100 divided by 100 plus markup. There is also an error on your question paper. Under number 2, total columns and subsidiary journals. The first journal is your cash receipts journal, and the second journal is not your cash receipts journal. It is your cash payments journal. So please just cross out cash receipts journal and write cash payments journal. Our first ledger account to complete is our inventory account. Inventory is classified as an asset plus minus. From additional information number 1, we can fill in all our balances. So our opening balance is 550,000. They have given you extracts of all the journals, so this is just simply theory work that you can write down before you start your account. You know inventory on the debit side, you will have your CPJ journal, bank, CJ journal, creditors control, petty cash journal, petty cash, and debtors allowances journal, cost of sales. Now you're simply just going to take the totals as it's given to you on your question paper and simply just go and complete it. So bank CPJ total is 183,000 for inventory. The CJ total is 12,000 for inventory. The petty cash total in your petty cash journal is 300 Rand for inventory. And our cost of sales for debtors allowances journal is 2,600 Rand. All of these amounts were given to you in the extract on your question paper. Then on the credit side, your CRJ, you're going to go and look at your cost of sales for inventory was 86,000. Your cost of sales DJ is, okay, that we're going to have to calculate. I'm going to explain that to you now. Then let's just quickly complete our creditors allowances of 1,500. Do you see that they saying that the sales is a question mark if you go to your cash receipts journal? So you need to know, first of all, you're going to calculate your markup percentage. And then once you've got your markup percentage, you can then calculate your cost price or your selling price. So let's go have a look at our markup percentage formula again. Markup percentage formula, you take sales, you subtract debtors allowances from your sales. Once you've got that answer, you subtract cost of sales, and then you divide it by cost of sales. So that is your formula. So in this exercise, our sales was given to us as 165,000. Our debtors allowances was given to us as 3,000. And our cost of sales was given to us as 135,000. Okay, so now I've taken my same formula and I've just entered the amounts. 165,000 minus 3,000 minus 135,000. Divide that by 135,000 and I get a markup percentage of 20%. Now that I have my markup percentage, I know to work out my cost price. I say selling price times 100 divided by 100 plus markup, which is 31,200 times 100 divided by 120, and then I get 26,000 as my cost of sales for inventory. So that is how I got 26,000. I've highlighted in red so that you can just know that this was not from your extract given. It was a calculation that you had to perform. Now that we've entered all the transactions in our inventory from our extracts of our journals, we can now simply just add up the debit side. If you add up the debit side, you get a total of 747,900. You know that the credit side must also equal to 747,900. So the difference on the credit side is 634,400, and that will be your balance brought forward on the 1st of May, 634,400. Our next ledger account is our debtors control account. Our debtors control is an asset plus minus. Again, by now this theory work you should know and understand. Because it's an asset, our opening balance will be on the debit side. Then you will also have your DJ sales and your petty cash journal petty cash. And on the credit side, you'll have your bank CRJ, debtors allowances DAJ, and your balance carried over. These extracts totals are given to you. So your DJ, debtors control, is 31,200. Your petty cash journal for debtors control is 140. CRJ debtors control is 42,000. Debtors allowances journal for debtors control is 3120. Now that we've entered all the transactions from our extracted journals, we simply add the debit side and we get 119,340. We know the credit side must also equal to 119,340. So the difference on the credit side is 74220. And that will be our balance that we will bring forward on the 1st of May. Our next ledger account is our bank account. We are starting with an opening bank balance of 23,000 given to us. Then if you go to your total bank CRJ in your cash receipts journal, it is 160,000. Your cash payments journal is 256,000. Now we've entered all the transactions, so we simply now need to just add up our two sides. You will see in this case that your credit side is the larger amount, so our total on the credit side is 256,000, which means our debit side must also equal 256,000. So this time we will have a balance carried over on the debit side, which means our opening balance will be a credit balance. So now our bank account has changed to an unfavorable bank balance. So in the next month for May, it won't be an asset anymore. It will then become a liability. And that balance is 73,000. Our last ledger account on this page is our petty cash. Our petty cash account is classified as an asset plus minus. We have an opening balance of 950. It told us under the instruction that we must accept that the petty cash impressed amount was restored. So that means our balance for petty cash is 950. It must always be 950. It was restored. So our balance carried over will be 950. If we go to our bank CPJ, we will see that our petty cash purchases for the month was 830 Rand. Okay, because it was restored, it will be 830. So now we can just simply add up our debit side to give us 1780. Our credit side also equals 1780, and the balance that we will bring forward is 950. Our next ledger account is our creditors control ledger account. It's a liability. Our signs will be minus plus. So our opening balance will be on the credit side that we bring forward 63,000 given to us. Then on the credit side, you'll have your CJ Journal sundry accounts. If you go to the extract, it was 18,000. On the debit side, if you go to creditors control and your CPJ total, you get 41,000. Creditors control in your petty cash journal is 230. The total of your creditors control in your CAJ is 4,000. Now you've entered all the totals through to your ledger account. So now you can simply add up your credit side to give you 81,100. We know the debit side is also equal to 81,100. So the difference on the debit side of 35,770 will be your balance brought forward on the 1st of May. 35,770. Then our sales account. Our sales account, we have our opening total on the credit side of 165,000 given to us. And our debtors control DJ of 31,200 Rand was also given to us. Then we need to calculate our sales account as our cash sales amount. So to work out our selling price, we're going to use this formula. Selling price is cost price plus our markup percentage. Our cost price is 86,000 given to us in our opening balances, and then we worked out that our markup percentage was 20%. So if you add 20% to 86,000, you get a selling price of 103,200. I have made this entry in a color so that you know that it involved a calculation. It wasn't given to you on your list, extracted list of journals. Now that we've completed all the transactions, we simply add up the credit side and we get 299,400. Then our cost of sales ledger account. On the debit side, we have our total brought forward of 135,000. Our inventory cost of sales is CRJ 86,000 given to us. Our credit sales we worked out on the previous page as being 26,000. I'm putting it in red just to show you it was a calculation. If you forgot how we worked it out again, you take your selling price, you times it by 100 divided by 120. Our selling price is 31,200 divided by 100 over 120 gives you 26,000. Then on the credit side, our cost of sales DHA total is 2,600. Now we've entered all the entries that goes to our cost of sales. So now we add up our debit side and we get a total of 247,000. We know the credit side must also equal 247,000. So the difference of 244,400 is the total that I will bring forward on the 1st of May. And then our last ledger account is our debtors allowances account. It's an owner's equity expense. So on the debit side, we'll have our total that we bring forward of 3,000 given to us. And then if you go to your DHA journal extract, you'll see the debtors allowances was 3,120. Now we just add up our debit side and we get 6,120. We have now come to the end of exercise 2.7.